Namaskar, good evening. Today I am again with you to discuss about a good compounder, a chemical company called Deepak Nitrite Limited. Chemical companies have been on the uptrend since last year. Deepak Nitrite also has been on the uptrend from the last year. Many contributory factors are there. In China, they are enforcing environmental restrictions very vigorously. Therefore, the Chinese either have closed down or their factories have become costlier. So, for competing, these are the things. So, our factories are able to compete with them much better now. Deepak Nitrite also is deriving that benefit. Deepak Nitrite is having manufacturing facilities in Gujarat at Nandasari and Dahej, and in Maharashtra at Taloja and at Hyderabad in Telangana. Its product portfolio consists of basic chemicals BC, fine and specialty chemicals FSC, fine and specialty chemicals, and performance products PP. BC, basic chemicals, FSC, fine and specialty chemicals, and PP, performance products. Now it has announced its results for the first quarter. The results are reasonably good, so we'll go through that first. Revenue for Q1 is 422 crores compared to 317 crores. This 317 crores we have excluded an insurance claim of 22.5 crores. So it is up 33% year on year. So revenue is up 33% year on year in Q1. Now the company says the basic chemicals witnessed improving demand and pricing. Both prices are increasing and volume also is increasing. Fine and specialty chemicals FSC is also seeing strong traction in especially export markets. The performance product division has also delivered encouraging performance on the back of strategic initiatives taken by the company earlier. So revenue has gone up due to several factors. Volume and price both contributing. Now EBITDA stands at 57 crores and is higher by 66% as against 34 crores in the previous Q1. Now here also the insurance claim 18 crores has been excluded. Now why this insurance claim? There was some fire or something, some accident in its factory, and some damage was there last January, and these people have made a claim on the insurance company. That has been excluded in comparisons. EBITDA margins have improved by 13.5% as compared to 10.8% in last Q1. Margins also have improved in this Q1. Profit before tax is 33 crores in the latest Q1, a growth of 170%. Profit before tax has improved by 170% over 12 crores in the same period last year. As I said, at Roha factory there was a fire, so therefore the last Q1 suffered because of that. So not strictly comparable, but still this Q1 is far better. Profit after tax grew by 169% to 22 crores in this Q1 compared to just 8 crores in last Q1. So 169% improvement in profit after tax. Earnings per share have stand at 1.6 per share on a face value of rupees 2 each, compared to 1.54 in the earlier Q1. But this Q1 is on a much higher equity. There was a QIP of 56,81,775 shares of rupees 2 each at a price of 264. Remember, last year, January 2018, they have issued a QIP at 264 rupees per share. whereas current price is hardly 241. Now, the price earning ratio based on the current EPS is 37.66. Moderate, slightly higher. Face value is 2. Volume is 1,62,000. That means buying and selling are easy. Price increase, if you compare it with last year it was 166. Therefore, there is an increase of 45%. A reasonable compounder. Now, what will be the position? So maybe next quarter, or 1 year afterwards. Let us see. The CMD Deepak C. Mehta says we have been able to successfully pass on rising input costs. All input cost rise has been passed on. Managed to have higher volumes across both export and local markets. Now, FY19, this is crucial. FY19 is likely to be a breakthrough year for us as we are commissioning our ambitious mega greenfield project of phenol and acetone in Dahej in current month, that is August. At full capacity, we anticipate that our plant will save the nation close to US $400 million in value of imports saved. This is an import substitution project. It's a mega project aligned with Make in India to manufacture 2 lakh metric tons per annum of phenol and 1,20,000 metric tons per annum of acetone. It is supported by a capacity to manufacture 2,60,000 metric tons of cumene, which is a feedstock for manufacture of both phenol and acetone. It's a greenfield project supported in all possible ways. It is to be commissioned in August. In addition to this, our growth during this year will be driven by increase in capacities for select products. Not only this greenfield product, but there will be capacity increase for other select products, build up of newly introduced product lines, and recognizing pockets of opportunity due to shift in global supply chain. We are already witnessing an escalation in inquiries for existing and new products and are geared up to capitalize on the multiple opportunities ahead. So, Deepak Nitrite is on the verge of a huge expanded capacity. Now, domestic versus exports, let us see how it is. Domestic revenue stand at 265 crores in Q1 against 215 crores. 265 crores now, 215 crores last. Growth of 23% year on year. Now, exports 153.82 crores now compared to just 98 crores in last Q1. So, an expansion of 56% in exports. So, there is a strong demand trend in all key markets, currency tailwinds and stabilization of operations. Currency tailwinds also helped. Then segmental performance. So, basic chemicals and specialty chemicals, how did they perform? Basic chemicals stand at 223 crores against 180 crores last, a growth of 23% year on year. So, there is an improved demand for basic chemicals. Now, fine and specialty chemicals 122 crores now, higher by 49% compared to 82 crores in last Q1. So, 49% increase in fine and specialty chemicals also. Then PP segment, performance product segment, revenues are 81 crores now compared to 61 crores in the last Q1, a 33% increase compared to last year. Now, against this, now let us judge the company. It is on the verge of a huge expansion. In August, it is to be commissioned. They say all formalities are over. So, if not August, definitely it will be commissioned in September, let us assume. So, the additional products will come into play from this quarter itself, and from next quarter will be a full quarter. So, from now onwards, we will be seeing much higher sales, much higher production, much higher sales, and much higher profits also. So, but current prices are also not very low, I would say. So 33 price earning, something like that is there. But that said, Deepak Nitrite is seeing traction in all of its products, and the new products are also going to be in great demand, already in demand. That's what the company says. Therefore, Deepak Nitrite is on exciting times. Now, still I won't say buy. It is likely to be a good compounder, if not multi-bagger. It may be a multi-bagger. We don't know next year. But it was not a multi-bagger in the past. It was a reasonable compounder in the past. Likely to be a reasonable compounder in the coming years also. That much we can assume. So now you take your decisions. Kindly listen to the videos 2 or 3 times. See, I strongly suggest that, and take your decisions. I will come up before you with another good compounder or multi-bagger very soon. Thanks for listening. Thank you.